TV18 and you're watching CNBC TV18.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, the countdown to the budget has begun, and while usually the interim budget, it isn't the major schemes that are announced. That trend, of course, has changed in the last couple of decades. Major populist schemes find their way into election budget, and this time around there are pressing matters that the government will have to address. The two areas that need immediate attention are the farm sector and the job creation. The finance minister at the CNBC TV18 Ibla speech has hinted towards a farm relief package for distressed farmers in the budget to be presented on February 1st. The FM said that the farm sector has been facing challenges and the market will understand if an approach is rational and not populist. The Agri Ministry also has prepared cabinet note addressing income deficit of small and the marginal farmers, proposing various steps including financial package and interest waiver for timely crop loan repairs. While we wait for all of those details, it's important also the way the value chain functions. The credit finance and the warehousing and industries like food processing sector has been something that has been quite in the limelight with the government. Let's talk about the farm sector, agri and warehousing, and for that we are now joined by Sandeep Sabharwal, who is Group CEO at Sohanlal Commodities Private Limited. Sandeep, hi, good to have you. The thrust from the government, of course, clearly has been on the agriculture sector and the farmer remuneration. What, according to you, would be the major areas that you think need quick attention? Is it going to be the inputs, financing, warehousing, post-harvest issues? Where do you think the government will need major thinking to happen?
So thank you, Manisha, and I think it is very important to put this budget as well as the agri industry into a right perspective. We've had successive budgets coming across where farm SOPs have been given out, but at the same time we still look at the dismal structure of the industry. It seems that a lot more has to be done. Now, having said that, I think there is a clear policy thought process that we would like to also see in the coming budget is the fact that, till now we've seen the input side of the farm being helped, whether it is in crop loans, whether it is in subsidizing fertilizers and so on and so forth. But I think there is a clear need for the industry to move forward into forward integration. What I mean by that is that, once the crops have got harvested, there's a requirement for those to get credit finance behind that. Now, there are a lot of NBFCs and ag tech companies and other ag companies which have come up which are trying to address that issue. But they themselves get faltered upon because of lack of credit being made available to them either at the right time or either at the right price. So I think there would be it will be a welcome move if we see something on this side. At the same time, if I were to address the post-harvest agri-logistics piece in terms of warehousing, which is an integral part of ensuring that the food supply chain is maintained, we've seen SOPs in terms of creation of assets, but we've not seen SOPs in terms of making the entire industry profitable. I think it is important that as we go forward, there are tax incentives, liability lines made available to people like these or companies like this, especially who are in the cutting edge of ag tech, to ensure that the benefits of all the technology and the benefits of all these schemes actually get passed on to the end consumer. So in a gist, what I would say is our expectations from this budget are very clear. One, obviously, more and clearer liability lines being made available to agri output industries, for example, NBFCs which are doing agri financing, looking at ag tech companies, and obviously some sort of SOPs which enable the sector, thereby creating a pull into the industry and making the industry profitable, thereby paving way for larger capital to flow into this sector.
Sandeep, also, if you look at the warehousing, that has come a long way, but still there are a lot of niggling issues and we don't see it featured too prominently in the scheme of things. Even when we talk about the government procurement or the storing facilities for the farmers, there is barely a mention of the warehousing and, of course, the regulations that have been talked about but not cleared.
So in terms of immediate measures, if you look at this, you see the idea that farmer is doing a distress sale. It has two facets to it. One obviously is the fact that the warehousing facilities, and I would now qualify them, scientific warehousing facilities being made available at the ground level. And the other important part that I would also like to state is that the fact is that you have to empower the crop. Now when I say empower the crop, a farmer who's doing a distress sale is doing it for the other reason of actually meeting out his liability lines in terms of his crop loans or loans that he have taken, or for his social obligations. Now having said that, it is important that he gets the right credit at the right time. And that is where I came from, the fact that there are a lot of ag tech companies, there are a lot of NBFC industries, or there are a lot of other such companies which have started intermediating such loans. And I think that is where credit availability has to be made sure that those liability lines are coming to them at the right pricing at the right time, so that they are in turn able to facilitate the farmer.
Sandeep, one area that the government, of course, has been talking about, and we've seen a lot of protests from the farmers, have been the farm loan waivers. It is a result of farmers not getting the right cost of their produce. But then again, when you look at the latest numbers that are available, the institutional finance itself is not available to a lot of farmers. The data shows that it is the cooperatives and the money lenders that still rule the rural India. What do you see as a change that needs to be brought about there?
So I think the right initiatives have been taken, whether those initiatives are in digitizing the data being available on the ground, or for the fact that you see a lot of, either for example the ENAM initiative of the government, which is trying to link the mandis into a electronic enablement platform. But I think there's still a lot to be done, and why I say that is because the integration of these platforms to a delivery mechanism which facilitates both physical delivery as well as physical availability of credit, that still needs to be, that part still needs to be addressed. So I do believe that though the intentions are correct, but the delivery mechanism on the ground needs to be beefed up. There has to be a lot to be done to ensure private sector participation. And I again come back to the fact is that we are at a culmination point where we need to look at empowering the sector so that the sector becomes profitable, thereby encouraging private equity, private capital to flow into the sector rather than only being dependent on the government over a period of time.
Sandeep, you have mentioned about the private sector, but we see that very limited when it comes to agriculture as a sector. What incentive would you think that they need to be a big part of this kitty?
So Manisha, very clearly, you see, if I look at other industries, and we have been looking at other industries, whether they are software industries or export or other manufacturing sectors, the fact is that larger capital chases larger growth. And when I say growth, I mean growth both in number of volume as well as in return on equity. In farm sector, the return on equity is a very basic problem that all the farm sector is facing, and that is because of the fact that either the liability lines are not available on the right time, or the liability lines are not available in the right quantum. That's one important factor. The other important factor is that since it's a sensitive sector, which is both tackling a majority of the population of India as well as also the consumption of India, we do believe that it is important that some sort of tax SOP structures need to come across to educate as well as to facilitate the industry. So it could be lower tax rates to people who are providing this. Even for that matter, one large ask that has been there for quite some time now is the fact that if I look at the GST regime, warehousing which is being provided on leased warehouses, the lease expense is right now being treated as a commercial expense, and hence there is a GST applicable on the same. Whereas the output services of the warehousing is a GST devoid section. So in fact there is no that GST that we have to pay on the leases of warehouses actually is an expense on us in terms of larger expense being paid out. So there is no input credit mechanism for the same as of today. So these are a very small ask, but yes, there is an ask which affects the industry as such. So these small things, and obviously larger SOPs being made available in terms of either tax benefits, in terms of cheaper credit, I think these would enable the industry to grow faster and bigger.
Well, rightly mentioned, Sandeep, we have the long-term measures in place like the doubling of farmers' income, the agri-export policy, which we saw released in the last month itself. What do you think then the budget will announce to ease the farmer unrest and debts, and to ensure that while the longer-term structural reforms are in place, the shorter-term or the medium-term reforms also are taken care of?
So very important thing, one thing I think is that the whole idea of a free market mechanism has to be built in. We have seen successive years passing by wherein there has been artificial limits, either in terms of export bans or import bans, or which is in a longer tenure to fix a shorter problem. We have actually hampered the longer tenure growth of the industry. So I think a long-term policy which clearly envisages the movement toward the free market mechanism, both in terms of pricing, in terms of volume of this industry, would actually help.
Sandeep, that really brings us to the final question then. And we have seen various states come out with their own techniques, own reforms, like what Orissa has done, or MP did, or Telangana did for that matter. Would you say that it still is a state subject because there have been some successful reforms there, or you still think we do need a national policy to ensure that there is no unrest?
No, I think there has to be a national policy which is governing and engulfing all the policies at the state level. There has to be a national policy which talks about free movement of goods, national policy which talks about free flow of credit, a national policy which will dictate a larger export and import policy of India. Obviously, that itself is going to create a larger market and a stable market for people to play in. And once there is a larger market which is established and obviously credit is made available to that market, we would see private funds flowing in because the sector itself gets empowered to grow. And wherever there is growth, we've seen capital flow there. Thank you so much, Manisha.
All right, that point is well taken, Sandeep. Thank you so much for joining us. We've actually put out to you various categories, various areas that the government could be coming out in sense of its interim budget for the farmers and the agriculture sector. With that, we'll take a short break. When we come back, we'll look at the other areas as well. We will put in focus the gold industry and the commodity derivative market as well with the experts on the other side.